But our NSE team is waiting by Mangalam and Reema, and they have the big man with them, Ashishkumar Chauhan, Managing Director and CEO of NSE, Nilesh Shah, our own Nilesh Shah of Kotak Mahindra AMC, and Gautam Chhaochharia of UBS. They're all with them. Over to you, Mangalam.
Take that point, Lata. You know, it's a special day, a special session, but more importantly, a special place with a special bunch of people as well. We'll ring the opening bell for the budget session from the NSE where it happens. And along with us, Mr. Ashishkumar Chauhan, obviously Nilesh and Gautam as well. We'll start with you. You know, what an auspicious morning this has been for you. More importantly, by the next budget, the NSE will also be listed. Is that your, promise?
Probably do better than that, but hopefully...
Diwali Muhurat trading, NSE will be listed?
Hopefully, yes.
Hopefully, yes. All right, so that will be good news, but...
Just one question on that, right? So already NSE's valuation is close to 5 trillion in the unlisted market, which is nearly 5x that of BSE. So what is your thought process on the valuation of NSE as you go to list?
Madam, actually, as frontline regulators, we don't worry too much about our own valuation. And fact is, none of the employees got any stock options, nor we can even buy our shares or other shares. So
but unlisted mein to pop ho gaya after the
generally, we are immune to all this. I mean, of course, the outside people who actually invest money into NSE stocks, they would be having their own valuations. But broadly, our job is not to continue valuing anything.
Your job is to facilitate the business that happens. But Nilesh, what is it that you are looking forward to in this budget? Everything that could have been done from a consumption standpoint has happened, but FI is still not coming, rupees still weakening, the volatility that we saw in gold and silver. What's your wish list?
So one, in this budget, I want Honorable Finance Minister to do trinity of impossible. One, continue to spend money on infrastructure investment as private investment is subdued. Second, please honor your own commitment of reducing debt to GDP ratio to 50% by 2031, which means this year's fiscal deficit has to be lower than last year. And to do that, instead of raising tax, please raise non-tax revenue, asset monetization, divestment, or some out-of-box idea. And finally, Mangalam, I'll borrow from what you say. In this budget, let's create a DG Yatra for entrepreneurs, both local as well as global. DG Yatra allows us to enter airports very seamlessly, very fast. Can we create DG Yatra for investment, both foreign as well as local?
DG Yatra for foreign as well as local investment. That's the headline that you've given us out here.
I have borrowed from what you told me.
We'll give it to you. Gautam, what are the 3 key numbers that you're watching out for?
So one, no negative surprises.
Okay.
That's an opportune time to make sure we don't have some nuances here and there which creates an issue. Second is there's some media reports about the longer term plan. That will be useful to give that stability in the policy making. But longer term, not just in terms of aspiration, but backed by specific policies. Third is always hope for surprises, right? We always
What are you hoping for? What are you hoping for?
Some markets, people are talking about potential cuts in taxes,
for FPI,
FPIs, etc. So let's see. Fingers crossed.
But will there be enough in the budget to revive the animal spirits of the market? Because that growth impetus has been lacking.
So that the fiscal space is limited.
Yes.
So the debt to GDP does create some room for innovation, and specifically with a 3-year view, because debt to GDP gives us flexibility not for this year but for the next 3 years. So if you mix that up with a long-term plan and aspiration, really.
So give us one adventurous reform you think the budget can deliver this time.
I would go back to what Nilesh said, DG Yatra. That will be brilliant. That will be brilliant.
What is the one thing that can bring the FPIs back, according to you?
So one, there are many FPIs who don't pay tax in their own country, endowment funds, pension funds. When they have to pay tax over here, obviously it hurts them. And while our returns could be higher on a post-tax basis, but there is a mindset issue where I don't pay tax in my country, how can I pay tax in other country? So I think we should rationalize that anomaly. Anyway, we give tax exemptions to sovereign funds, to citizens who are coming out of certain countries like Singapore and Middle East on capital gains, extend it to the foreign portfolio investors who are tax exempt in their own country.
And broadly for me, I have been on a regulatory side, on the administrative side, and for me, the simplistic frameworks are easy to administer, and if a country, the companies are giving profits, and naturally if their prices are going to go up, people come. If the country has no taxes, but also the losses are going to be there, nobody comes, right? So it's always good to sort of say that they don't come this way,
For a
that way.
person who runs the business of an exchange, do you think reduction on STT and some people are even talking about abolishment of that because they believe that the role of STT has been done? Do you think that would be a positive?
Yeah, always Tobin tax has been kind of known to create friction and sort of irregularities, but in a way India has proved on many occasions the economic theory is wrong. So I would say government, I mean, it's almost 60,000-70,000 crore a year of STD. Government needs to figure out where the next sort of funds will come in case you give some relaxation here. So it is always about what you want to give vis-a-vis what you want to take, and that's where the balance will come.
Nilesh bhai, the budget priorities of... Sorry. Okay, we have time? All right, quickly. The budget priorities always determine the investment climate, right? So when the government was spending on Capex, we saw the industrials, railway, defense, etc. do well. Then the pivot came to consumption. This time, sectorally, what are you watching?
Liberalization.
Liberalization.
Just liberalize entrepreneur, they'll figure out where to go.
We have 30 seconds left.
All right.
So we have 25 seconds to go.
At 1 second, we have to...
We will ring the bell in about 30 seconds. This is a magical bell for today because you have to make a wish and then ring it. Yes. That's when all wishes will come.
I'm like a priest.
He will ring the temple bells before the IPO.
10,
No.
9, 8, 7, 6, 5, 4, 3, 2, 1.
Yes.
There goes the opening bell. Keep going for it. The harder you ring, the more reforms will come by. And there goes the opening bell. Nice.
Look lovely, and I think we need some more ringing. We'll come back to you guys. But just looks fantabulous from there. Ashish bhai, Gautam, Nilesh bhai, Nimesh, Rima, Mangalam. Thanks very much, guys, for that. We'll come back to you. I'll just... The NSC, they've got some super people with them to talk about what to expect from the budget and how markets will trade from here. Guys, over to you.
Well, you did speak about gold, so let's pose that question as well to Nilesh. Nilesh, you were saying that there is a fair amount of volatility, froth in the bullion market. And with the kind of decline that we've seen over the last 2 days, do you think you feel good that now people will come back to the equities saying that, okay, this is not as risky as the others?
So I'll request everyone to follow asset allocation. But then we all know human minds do get driven by greed as well as fear. I will still say, please follow your asset allocation. But chances are that over next 2 to 3 years, if you take a call, Indian equity looks better poised vis-a-vis, let's say, precious metal. Both are different asset classes. Risk-return profiles are different. But I think this is the time to have a look at Indian equity.
And in the equity, will it be the small, mid or large caps? Because large caps are very close to their all-time highs on the frontline index at least, not individual stocks, but mid and small caps, 15, 17% at an index level away from their highs, with individual stocks down 30, 40, some even 50%.
So our view over the next 12 to 18 months is that mid caps and large caps should outperform small cap. Large caps are at all-time high near, but their valuation are still around historical average. Small caps are down, but they are still at a premium to historical average.
Gautam, never before has this budget-making exercise been at a time when there's so much uncertainty on the geopolitical front. Fragmented trade, volatile commodities, the INR continues to hit record lows against the dollar. To your mind, what can we expect in the budget this time, which can bring back the growth impetus, apart from, of course, ease of doing business for all entrepreneurs? That's one big ask. But outside of that?
So I think going back to the 2 points, in the context of the global uncertainty, having no mistakes or no negatives, it's a big win to begin with. And in that context, to give a longer-term growth projection of plan in the context of global uncertainty, like the finance minister saying that irrespective of the US trade deal, this is our policy-making path for the next 3 to 5 years. That does help a long way. Now, growth is an outcome ultimately. You can't, beyond a point, can't do much. The elements are already in place, the banking system, the macro stability. Animal spirits is spirit, right? It's not a mechanical thing. And it will happen. It will happen.
Do you think, given the economic survey's view that despite our macros being extremely strong, the rupee is weak because now the reasons for that are not fundamental, it's more narrative based. So this budget will perhaps not look at fundamentals with such a tight grip, maybe slip a little on fiscal discipline for a bit, for bringing the narrative back to India. Do you think that's a possibility?
It's a possibility, but again, there should not be any panic around that. Look, even with the rupee move which we have seen, in the context of historical, like go back to 2013, we have far stronger macro environment stability right now. Okay? Rupee in this environment actually is helping to some extent. Okay? So we should not over panic around that. Some part of depreciation is fine. The context should be in the current context. We're seeing global uncertainty around all of us. So I won't panic too much about that.
Capex growth, fiscal discipline and net borrowing would be the three numbers that you would be comfortable with.
And again, that should be broadly in line, not too much of a negative surprise. That's the critical part.
10 to 11% capex growth will be good with you?
Second?
10 to 11%?
Yes. Yeah. In line with nominal GDP, maybe slightly uptick. That's what market is also hoping for.
And if we do get a thrust on defense spending, say the defense budget goes up by 15 to 20%, does that build an investment case to invest in defense stocks? How are the valuations right now?
So look, defense is a broad-based basket. There are pockets which are more richly valued than the rest. But as a fact, the market is expecting and pricing in that there will be increased spending. So spending going up by 15% will not be a positive surprise for the markets.
Ashish bhai, your last word on what is the biggest challenge that's facing Finance Minister as she presents her 9th budget right now, and what can she do? Your one, big wish list.
No, broadly, when broad framework is when the world around you is so tumultuous. Everything is kind of going from their convention places everywhere else. You need to focus. And the BJP governments over the last 25 years have been very fiscally conservative governments. Broadly speaking, they have brought down the fiscal deficit, the revenue deficits. And for me, if you continue on what you can do, vis-a-vis what the rest of the world will do. So that's where I think they have focused over even during COVID. But even post-COVID, they have been focusing on few things like infrastructure, where the government is sort of pushing the infrastructure, and that's helping the rest of the economy to move on, ensuring that the tax structures are now rationalized, automated, with very little hands-on sort of personalized activities. And so for me, you have to create rails, and then many trains can run. And that's what they have been trying to do for last 11 years. And I would say if you continue on that, we have a good growth engine that has come up.
All right, continue on that path. Last ball of the innings. Nilesh bhai, you're on strike. Take it away.
So one, last time when I came on CNBC TV 18, it was about precious metal and I won an orange shirt. That was the closest color available. I just hope and pray Rina's dress is not indicating anything for today's market.
All right, with that, it's back to you guys in the studio. Nilesh bhai hopes that Rima's dress is not the indicator of
and
the market.
And the contra-indicator.
I'd look at my tie as a hot pink tie because it's in the pink of the health, the economy.
Yeah. Okay, all right, guys, thank you very much. It's a fun chat, it's a useful chat, and I think, we'll keep going back to the NSC, which is, of course, one of the headquarters where we're sort of, beaming out of to cover this particular union budget. So once again, thank you very much, all of you there. Well, we have the other Nilesh here in the studio.